When we zoom out and evaluate the cryptocurrency asset class through its 14-year history, a clear pattern of boom and bust cycles becomes evident. According to historical records, bear markets occur after lucrative bull runs, but one of the primary differences is that with cryptocurrencies, these cycles seem to be more pronounced. And we're about to tune into a bull market, and so much is expected to be unveiled. You can still remember that for the extraordinary part of last year, the cryptocurrency market was decimated. There were many scandals, contagion, and overconfident companies capitalizing on an influx of capital in an unsustainable fashion, and nearly every cryptocurrency lost significant value in 2022. Even the macroeconomic backdrop of rising interest rates and multi-decade high inflation erased any hopes of a respite. However, there is reason to believe that the worst might be coming to an end. Based on past crypto winters, it seems like Bitcoin just might have put the worst in the rearview mirror. But time is still a determining factor. Only time will tell whether this is the case, and we have turned the page on the most recent crypto winter. Right now, there are enough reasons to believe that the bear market is ending like those in the past because the entire crypto market has risen more than 40% year to date in 2023. If things play out as crypto investors expect, then the current buyers have the most to gain in the long run. Bitcoin might have finally mustered enough momentum to thaw this crypto winter and pull the rest of the market with it. Many cryptocurrencies have been performing well lately, and since the most exciting thing about cryptocurrency investments is that when they explode, they skyrocket in value, unique things are definitely set to happen. Of course, things haven't gone right for over a year now. Crypto had entered a bear market and prices on most of the major coins fell significantly. We understand that there is no guarantee that crypto is here to stay, but there has been scenarios where the market has bounced back after a dip. The second largest cryptocurrency by market cap, Ethereum, is looking quite ready for a bull season as well. At first glance, Ethereum might seem out of place here. It's far from under the radar, and it has been the second largest cryptocurrency for years now. Consequently, most crypto investors know about it. Okay, we probably have passed the point where Ethereum shoots up by 10,000%, but it does have some serious growth potential. It was the first blockchain to offer smart contracts, which developers can use to build DApp, or decentralized applications. Ethereum's first mover advantage has given it a sizable lead over similar competitors as well. Ethereum went through its long-awaited changes to a proof-of-stake system in September of 2022, thus significantly improving its energy efficiency. The upgrade also means that it is now possible to stake Ethereum and earn more, which could help attract more investors. Above all, Ethereum has great growth potential without the extreme volatility of smaller cryptos. Ethereum's future exchange-traded fund recently hit the markets after the SEC approved 9 products simultaneously, an encouraging sign for cryptocurrency investors. Valkyrie Investments, VanEck Funds, ProShares, and Bitwise Asset Management all launched funds incorporating Ether futures, while ProShares, Bitwise, and Valkyrie launched multiple versions. 2 other firms, Volatility Shares and Kelly Strategic Management, were also approved to debut Ether futures ETFs. While the agency approved ETFs that track Bitcoin futures in 2021, the regulatory body has thus far rejected and delayed all applications that seek to track spot Bitcoin. An expert noted, Gary Gensler is reacting to the criticism he had received over the past several months from all quarters. The approval comes as the Securities and Exchange Commission and its chairman, Gary Gensler, have come under increasing pressure to approve digital asset ETFs. The expert added, the court rejected the SEC after the grayscale ruling. Congress has been highly critical. I believe that Gensler approved the Ethereum futures ETF as a way of demonstrating that he's been responsive to these and making a point that he isn't anti-crypto. However, his actions have been anti-crypto. The SEC chair has been under fire from Congress recently, and changes are highly expected. To drive the upcoming bull run, the spot Bitcoin ETFs are required to get approved. The group of US Congress members have sent a letter to Gary Gensler urging the agency to approve the listing of spot Bitcoin ETFs immediately. This letter was signed by the representatives Mike Flood, Tom Emmer, Richie Torres, and Wiley Nickel. The lawmakers argued that a regulated spot Bitcoin exchange-traded fund would increase investor protection by providing safer and more transparent access to Bitcoin investments. Congress has to ensure the SEC approves investment products that meet the requirements set out by Congress, the letter stated. Last month, the U.S. Court of Appeals for District of Columbia Circuit rejected the SEC's argument that Bitcoin markets were uniquely resistant to manipulation and not yet mature enough for ETF approval. The court ruled that this claim did not justify the SEC's decision to deny Grayscale's proposed Bitcoin ETF. And with this, the Congress members wrote, there is no reason to continue to deny such applications under inconsistent and discriminatory standards. They further argued that the SEC stance is untenable moving forward. The SEC had repeatedly blocked proposals for spot Bitcoin ETFs despite applications from major financial firms including Fidelity, BlackRock, Bitwise, VanEck, Galaxy, Invesco, and WisdomTree. The agency had only approved Bitcoin futures ETFs so far, which has drawn criticism over inconsistent standards. The lawmakers told Gensler a spot Bitcoin ETP is indistinguishable from a Bitcoin futures ETP. Thus, the SEC's current posture is untenable moving forward. Then they pressed the SEC to quickly approve a spot Bitcoin fund. However, the SEC asked a group of firms, including Grayscale, to withdraw their applications for an Ether's futures ETF in May of 2022. But in July, companies began rapidly refilling after the agency reportedly signaled it was ready to review the applications. The SEC also likely approved the ETFs on a faster track than originally anticipated due to the potential of a looming government shutdown. Things haven't been so easy lately, but there is a problem. Despite the instruction of Congress, the SEC has again delayed its decision on 4 prominent Bitcoin exchange-traded fund filings currently under consideration. Perhaps there's no reason to worry about the SEC's hesitation. If we take the words of Jay Clayton to heart, there might be renewed hope. Former SEC Chair Jay Clayton suggested that the regulator will likely approve a Bitcoin ETF during an interview with CNBC. Clayton added that he was not surprised that the U.S. Securities and Exchange Commission is postponing decisions on various pending Bitcoin ETFs. He went ahead to explain that the job for the SEC is a challenging one, noted that when cryptocurrency first emerged, the securities regulator had to handle offerings that were not compliant with securities laws. It's a different situation now. The SEC has to deal with broader crypto offerings, including some that have clearly shown promise. Jay Clayton asserted that participation from large institutions and surveillance sharing mechanisms exist for prospective spot Bitcoin ETFs. He said that, to his knowledge, this is the only objection that the SEC had towards spot Bitcoin ETFs in the past. Moving forward, in his latest analysis, Dan Gamendello predicted that the next bull cycle may be the cryptocurrency market's most impressive, given all the numerous bullish developments that have taken place during this bear market. Various crypto platforms have indeed taken time to build in this bearish season. He said this in a video. The analyst highlighted Ethereum and Ripple as cryptocurrencies to watch in the next bull run. His focus on these 2 altcoins was driven by Ripple's slight upper hand against the U.S. Securities and Exchange Commission and the latest ETH spot exchange-traded fund approvals that have been filed by reputable fund managers. Nonetheless, Gamendello cautioned that the cryptocurrency market is respecting the cycles, thus justifying why the list of bullish news events is yet to reflect the desired sustained effect on the prices within the market. In addition, he speculated that the market is not in a bull cycle yet, and is currently in an accumulation phase. With his bearish thesis, he warned that the price of Bitcoin may drop to 21K within the coming weeks, referencing that the market leader's price movements leading up to historic halving cycles. If the Bitcoin price does drop soon, it could result in prices across the market declining as well. Towards the end of the video, Gamendello pondered the possibility of market manipulation by large market players, who may be compressing prices and accumulating in anticipation of the next bull run. Given the surge in ETF applications over the past few months, it is safe to speculate that fund managers may be attempting to increase their exposure to cryptocurrencies. This speculation revolving around institutional investors' involvement in the market's current sideways movement is supported by the market's resilience and wins against the SEC over the past few months. Plus, he said the introduction of large market players and the support of the law could lead to meteoric price surges in the next bull cycle. The expectations are now high, things are getting sorted, and if everything works according to plan, there is a bull party to celebrate. But that's going to do it for today's video. Make sure you click on the subscribe notification buttons, and we'll see you in the next video.